Thanks for joining us. I'm Marlon Bowling with you as we take a close look at your ag commodity trade with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. He joins us right now. And Brian, your take on the USDA crop progress and condition numbers yesterday and the trade reaction after that.
Yeah, not much really to look at that's a surprise to the trade. You know, corn, good to excellent ratings, very similar to what we saw last week. Soybeans, first ones of the year, very close to expectations. And these are very highly rated numbers. So we're off to a fantastic start, no doubt about that. And the trade, I think, had known that for a little while here. The question will be as we go through the month of June, we go into the key pollination time frame and pod setting stage, can we maintain these high type of ratings? Last year, we weren't able to maintain the ratings. We kind of slipped as the summer went on, as things were real dry across the Midwest. But price reaction was very muted. So we are, certainly going to be watching weather forecasts closely, see if there is any type of adverse weather. But right now, that's not on the horizon. Trade seems to be reacting more to what's going on with relationships between the U.S. and China.
So in case anybody missed it, we had the crop condition ratings for the corn and soybeans, and the corn condition rating nationally yesterday, it did go down, but only 1 point. It remained at 78%, rated good to excellent. And we had the soybeans with their first report of the year, and on the good to excellent scale, it was 75% good to excellent. So it's starting out very good, just like the corn did last week on their first rating. And that soybean rating happens to be the tied for the second best rating ever for the first report of the year as well, just like corn did. Now, looking at our prices here on the corn board, let's go to Chicago and look at live quotes. Right now, you have your July contract 3 higher, so it's firming up again, just like it was overnight. We are now at 383 3/4, and you have December new crop 2 3/4 higher. We're at 404 per bushel. In the soybean trade here this morning, we've been on both sides of unchanged. There for a while, we were down about 4 cents or so. Well, now you have July soybeans trading 2 higher at 103 3/4. You have the August contract up 2 at 1008 3/4, and November 2 3/4 higher at 1022 1/4. So kind of a whipsaw market here in the soybean trade today. Now, if you look at the wheat in Chicago, July wheat, here you go, 9.5 higher at 514 3/4. In Kansas City wheat for the hard red winter wheat, we have July 10 1/4 higher at 531 3/4. Minneapolis spring wheat trade has July now 5 1/4 higher at 598 1/2. Cotton got pounded on the open this morning. It's still down 175 points at 90.35 cents per pound on July. December down 157. Brian, this wheat trade here, it is showing signs of life here today after being driven into the ground for a few days. But is that any selling opportunity in your mind, or are you going to be more patient here?
Yeah, this is definitely not a selling opportunity. I think this is, a market that has pulled back here into some retracement levels, and this is a point where, time to remove some hedges, take some positions off, that sort of thing, as I think we're going to probably see some higher prices. Now, that may take a little while. We've got to get through the early stages of harvest, which I think is what's driven us lower here. Harvest starting off in Texas as we go into Oklahoma, Kansas. If we don't see very good yields, I think we will see a pretty good recovery in these futures and push back up into those high levels. And that would be a point where I'd want to go ahead and start making some sales, but only after a significant rally.
Okay, Brian, we'll bring you back here in a moment, and we will take a look at what's going on in our livestock trade as well. Choppy markets there, too. You don't want to miss it. We'll be back after this. Thanks again for joining us here on a Tuesday. I'm Marlon Bowling with a look at our ag commodity trade, and we are live, and we present live quotes to you. That means we talk with our analysts live, and we have Brian Hoops on the line right now live. He's with Midwest Ag Solutions, Midwest Market Solutions. He's based in Springfield, Missouri, and Brian, you actually have some breaking news for our audience here, so scoot up to the TV or the radio and check it out. Brian, what did you find out here?
Yeah, we're starting to see some firmness in the grain prices here, especially soybeans. They've on the highs of the day currently, and news are starting to break that China has offered to buy $70 billion worth of ag products. And this is in part of the negotiations in the relationships between the United States and China. No doubt this amount will be rejected as President Trump is looking for far more of a reduction in the deficit. Right now, that deficit's about $375 billion. So this is, just kind of one of the part of the negotiation ploys, but it has seen our markets react, and we firmed up. The cattle futures have turned higher. Hogs come off their lows, and certainly the grains are firming up because soybeans, if we reach an agreement, will be a major beneficiary of any agreement that's reached.
So that's very interesting. And of course, we were just showing live quotes there on soybeans and noting that they had turned around. They had been 3 or 4 lower, and now they're about 4 higher. So that was worth a real fast 7 or 8 cents just in a few moments' time. Let's take a look at the cattle and see what they are doing right now. Of course, cattle have been on both sides of unchanged here. Wow, check it out. June live cattle now up $1.90. We have the August contract where most of the volume is now. It's up $1.37 at 103.82 per hundredweight, almost on the high of the day. And October now up 108 at 106.48. On the feeder cattle side, here we go. August up 87 at 145.72. And sure enough, all the deferred contracts from September on out are over $1 higher now. And that means about $1.50 turnaround here on that September contract. It's quoted at 146.68. That's up $1.08 right now. On the lean hog trade, it had been over $2 weaker. Well, we're coming a little bit off of that low. We have the July now down $1.92. We're at $76. It has rebounded about 80 cents off its early low. August down 156 at 74.92. Brian, the talk this morning has been the fact that Mexico is going to issue some retaliatory tariffs on U.S. pork products. So.
Yeah, that's a real negative news item because they're a big buyer of U.S. pork, much more than what China is. So yeah, that would be a negative. And again, this is all part of the negotiations with China, and you've got Mexico, you've got Canada. All these agreements are being negotiated. So there's going to be a lot of news that are going to come out, a lot of false type of market moving type news where we get a rally because something like this happens, but I don't think this is going to be an agreement that's going to be reached, and so we probably are going to see the markets pull back after initial reaction.
All right, I want to take a look at the value of the U.S. dollar as well, and sometimes the crude oil market can jump around also. Right now on the U.S. dollar futures on the index, we have June now trading 110 points higher at 94.090. And if you look at the crude oil trade right now, West Texas crude on July is now 29 cents higher at 65.04. It had been lower. Brian, thanks so much for sharing that breaking news with us. Appreciate it, sir. We'll talk to you again soon.